Hello everyone, I hope everyone is doing well. In today's video, we are going to be explaining the understanding of contracts and tick values. Okay, so open your ears, open your eyes, bring a pen, notebook. So if there's any questions you would like to ask me, write it down on the notebook so then you can ask me later. So, understanding the contracts and tick values. So for those who doesn't know, we have two contracts inside the Nasdaq asset. So we are trading the Nasdaq asset, but the Nasdaq asset it has two contracts inside. And particularly we will be trading those two contracts. And these contracts they have leverage inside them, okay? So there's price for each contract. So we have two contracts. We have the micro contract and we have the mini contract. Okay. So the mini contract is larger than the micro contract. So when you are trading the mini contract, you are trading with more size. When you are trading the micro contract, you are trading the smallest contract. There's only micro and mini contract in the futures. Okay, since we are trading futures. So the micro contract is smaller than the mini contract. Now, the price of the mini contract per tick is $5. The price of the micro contract per tick is 0.50. And we are going on the charts so I can tell you how you can put the micro contract and mini contract, because if you are going to trade today, okay, whenever, and you are simply on the wrong contract and you are putting a lot of contracts in, you can blow the account or you can lose all your money. So it is very important to know how to switch contracts. The MNQ stands for the micro contract. The NQ stands for the mini contract. So I'm going on TradingView. I don't know which chart to use, but I use TradingView to chart. So I'm going on TradingView and I will show you how you can put these two contracts on the chart, especially for you, okay? So you can understand perfectly which contract you are using. Okay, so you can see, boys, that right now we are on the chart. We are on TradingView, all right? And I already said that we have the micro contract. I'm gonna put this larger text, and we have the mini contract. Now, if you want to trade the mini contract, then you're going here on the search bar and you're simply gonna write NQ. You're gonna take this arrow and you're gonna press on the NQU. When you see NQ, the first two letters, that means that you are on the mini contract. The Q represents the month, okay? Because we have expiry months. Okay, sometimes we have NQU, sometimes we have Z, sometimes we have H. For example, for the September contract, it's U. For the December contract, it's Z. For the March contract, it's H. But the first two letters always stays the same because they represent the mini contract. So, if you want to trade the mini contract, you're gonna press the NQ section. And since we're in the September contract, I'm gonna press on that one. Everything the same, the charts are the same, okay? Values are the same. I mean, the price is the same here, okay? But you are trading a larger contract. Now, if you want to trade the mini contract, I'm gonna press the search button again, and you're gonna put MNQ. You're gonna put the M, which represents the micro. Again, since we're on the September contract, okay, we're gonna press on the MNQU 2025. 2025 represents the year which we're in. So everything is the same, as I already said, charts the same, uh, price is the same, everything is the same. Basically, you are putting a larger size if you're in the mini contract. Now, let's go back on the notes so I can explain you what are the tick values for the micro contract and for the mini contract. Okay, back on the notes. So as you can see, so now we already explained what's the micro contract and what's a mini contract, and that the mini contract is larger than the micro contract. Okay. Now, since these two contracts they have sizes and tick values inside them, I will be explaining what is the price for a micro contract per tick and what is the price for mini contract per tick. So, the price of mini contract per tick equals $5. The price of a contract of micro contract per tick is 0.50 cent. So you can see here that the mini contract is is much more larger than the micro contract. Per tick of mini contract is $5. Per tick of a micro contract is 0.50 cent. Okay? So when you are entering a trade, sometimes you enter with 5 micros, or you can enter with 1 mini, 5 minis, 2 minis, 3 minis. You can enter 10 micros, 15 micros. Now, let's say you are going to put a trade, okay? And you are going to use the micro contract. You are on the micro contract MNQU 2025 in this case, okay? So you're on the right contract. You're going to put a trade, but yet you don't know how much money you're going to risk or make. So let me go back on the charts, okay? Let's go back on the charts, and I will be explaining how to calculate per tick. Depends on which contract you are using and how many contracts you are going to put on the trade. Okay, boys, so we're back on the charts. Let's say you want to put a short from here. Now, let me connect paper trading so I can explain you better, okay? Okay, perfect. So let's say I want to put a short from here. Okay, so I'm gonna put the short position, okay, for an example, and I want to put my take profit over there, and I'm gonna put my stop loss 50 ticks. Okay, I'm actually gonna target down here. Just an example. Okay, just an example. Okay, so let's say first things first, if you want to trade the micro contract, make sure you're on the right contract. So we are on the right contract as of now. At the moment we are on MNQU 2025, and let's say I want to enter 5 micros. Since per tick costs 0.50 cent, 50 cent, 0, let me get 0.50 per tick, okay, you want to do 0.50 times 5 micros, because that's how many micros we're going in the trade. And in that case, we are risking $250 per tick. Now, you might ask me, how do you know how many ticks you are aiming? When you put the projection of short position, you can see that you have a 200 and you have 50 over there. So in this case, we have 50 ticks stop loss and we have 200 ticks of take profit. So now you're simply going to do 250 times 200 ticks. Okay, and in that case, 250 times 200 ticks, we are aiming for $500, and we are risking, to calculate how much money you're risking, you have to do 250 times 50 ticks equals 1 to 5, if I'm not wrong. I don't think that I'm wrong. 250 times 50, that's $125. So you can, if again, I put 0.50 times 5 micros because we are going in with 5 micros. If you are going with 2 micros, 0.50 times 2, which then you are risking $1 per tick. If we have 50 tick stop loss, then we're simply going to, we're going to risk $50. And if we have 200 ticks of take profit, we are going to risk 200. Simple as that. Okay? And you can see from here, for example, units 5. Okay, it represents how many contracts we're going to put. Take profit and stop loss. Let's say we are going to put take profit of 150 ticks. You can see that we're gonna be making 224 with 5 micros, and if we put 100 ticks of stop loss, we are going to be risking 216. Wait, give me a minute. Yeah, because it's $250 and then it comes to 116 euro because you simply change it from dollars to euro. So yeah, exactly. So if you are going to put a trade with 2 micros, you're simply going to do 0.50 because that's how much per tick cost of a contract. And if you're in with 10 micros, for example, you're going to do 0.50 times 10. Okay, 0.50 times 10. How much that is? 0.50 times 10. I'm a bit stupid. 0.50 times 10 is $5. So if, for example, you are going to put 10 micros, okay, 0.50 times 10 equals 5. So if you're going to put 10 micros, that's same as you are going to put, for example, 1 mini. Because 1 mini per tick represents $5. So again, if you have if you are going to risk $5 per trade, per tick, sorry, then you're simply gonna have to do 5 times, for example, 100 ticks, okay, which is 500. So you are risking 500. And if your take profit is going to be 200 ticks, then 5 times 200 ticks equals 1000. Okay, if your take profit is here, you can look at it from here. We're gonna have 109 take profit, and if, for example, your stop loss is gonna be over here, for example, you're gonna have a 30 ticks of stop loss. You can either open this position to calculate how many ticks you are risking and how many ticks you are aiming for, or you can use the measure rule. Okay, let's say you are gonna enter short from here and you want to have a take profit over here, 169 ticks of take profit. So $5, okay, times 169 equals, I don't know how much is that. So yeah, this is a very quick example and I hope you understand it. Now, let's say you are going to trade the mini contract, okay? And you want to put a short position from here. You're gonna put your stop loss right over here, and you're gonna put your take profits down here, for example. So now, let's say you are going to put 1 mini, which is equivalent to $5 per tick. If you have a 50 ticks of stop loss, then you're gonna do $5 times 50 ticks equals 250. You have 100 ticks of take profit. 100 ticks equals 500. Okay? If you have 200 ticks of take profit, 5 times 200 ticks, 1000. Now let's say you are going to enter in with two mini contracts. So then you are trading 10. You are going to risk $10 per tick. If you have a stop loss of 50 ticks, you are going to risk 500. Okay? If you have a take profit of 100 ticks, you will be risking $1000. It's very simple, guys. You simply have to multiply how many contracts you are using. The contract size always stays the same. So per tick of micro contract is 0.50. Per tick of mini contract is $5. It's that simple, okay? Okay, so now I will be going over it again, so I will make sure that you understand everything correctly. So we have two contracts when we are trading the Nasdaq asset. We have micro contract and we have the mini contract. MNQ, the first three letters, they represent the micro contract. When you are trading the NQ, that means you are trading the mini contract. Okay, stands for the mini contract. Mini contract is larger than the micro contract. The price of mini contract per tick equals $5. The price of micro contract per tick is $0.50. If you are going to put 5 micros, you simply have to do 0.50 times 5. If you're going to trade 5 minis, 5 times how many minis you are going. Let's say 5, then 5, 10, 15, 20, 25. You're going to risk $25 per tick. If you have 200 ticks of take profit, 25 times 200. If you are going to put 5 micros and you're going to aim 100 ticks, 250 times 100. It's that simple, okay? And again, you can calculate how many ticks you are aiming on the chart using the ruler tool, or if you put a short position, you can actually use the that thing. I don't know how to actually call it. Again, the last letter which you're seeing here, that represents which month you're in. We have the September contract, we have the December contract, March contract, July contract, which you can go on CME group, okay, and you can look at all the contracts over there when they change and send at the expiry date of the contract. But all you have to know, okay, is which contract you are trading. It's very important that you are trading the right contract. That was it for today's video, guys. I hope you learned, and if there's any questions which you'd like to ask me, drop a message in my Telegram and I will do my best to help you. Until then, stay safe and see you in the next video.